All right, and we are live. So welcome back to Dapp University. So we got a lot to talk about in our live stream today. If you are around in the chat as I'm starting this video, let me know if you can hear me okay. We've been having a little bit of trouble with audio problems over the past couple days. So if you can hear me okay in the live chat, drop a comment so that I know that we're good to move forward with confidence. We'll get started here shortly. As soon as I get a affirmative. All right, let's see. We got people jumping in the chat here. We got Norris, Jason, Automatic Beats. Can y'all hear me okay? Affirmative. All right, Jason says yes. All right, welcome. All right, so let's go ahead and get into this. I got some funny comments in the chat already. So, got a lot to talk about today. I'm talking about a story of losing $180,000 in cryptocurrency. We're going to check on the crypto markets, look at a lot of the news updates that have happened in the space since our live stream yesterday. Again, we do these live streams on this channel Monday through Friday. Just subscribe, turn on notifications. You'll find out about those whenever we go live. We're going to answer some of your questions and a lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. There are videos out so to learn about blockchain. And if you're as fast at this technology as I am, you want to get your hands dirty, I can get started today. You can head on over to dappuniversity.com/bootcamp. All right. So we got people jumping in the chat here. We got a bunch of people. We got Rodrigo, Martin, Ryan, Jason, Genti. I hope I say that right. Sonny, Lee, Zen. Venture Warrior, Russell. All right, lots of people. So let's go ahead and jump into this. So we've been talking some on this channel about crypto airdrops. Okay, so crypto airdrops are one of the craziest things about the crypto space because in many cases, you can make, 5 figures, thousands of dollars, sometimes $10,000 plus for free just for using applications on the blockchain. Okay. We've seen this time and time again with the Uniswap airdrop. That was one of the first major airdrops that, people made a significant amount of money on. I made videos about that in the summer of 2020 when it happened. If you were around the YouTube channel, a lot of you probably weren't. You might remember that. We've seen the 1-inch airdrop. We've seen DYDX, lots of other airdrops, right? We're seeing this as an incentive to adopt this technology really early and actually launch governance tokens across multiple applications, across multiple blockchains. I have a feeling that the airdrops are going to accelerate over time as a way to incentivize new users on platforms. Now, not all airdrops are created equally, okay? In fact, some airdrops can be problematic, okay, for some users, right, depending on how you interact with them. And today I want to talk about an airdrop over the past, I believe it was yesterday. I think I'm getting this right, where it caused users to lose $180,000 in cryptocurrency. Okay. So let's pull up the story and check into this. Oops, sorry. Let me just fix my camera here. My camera is messed up. This live streaming software is a little bit frustrating. It's not really my software that does that part. It is the dongle that I use to connect the HDMI of my camera to my computer. That cam link, anytime I undock my computer, it just forgets how it's connected. Okay. So let's talk about the airdrop that went horribly wrong. Okay. Draining $180,000 from ETH users. So this is the WTF token airdrop. Okay. So what is this? So if you've ever seen this project, this is a website called Fees, WTF, fees.wtf. Okay. And what this does is basically a website where you can go look at all the transaction fees that you've paid on the Ethereum network, and it will tell you how much that's worth now, okay, from your wallets. So everybody who's connected their wallet to this website has spent, $2.5 million on fees. All right, you could go connect your wallet and see how much this is, okay? that's at least, that's just the statistics right here. I'm not actually sure if, so this is, hold on, this is using an account, this is using a different as account example. Sorry, it's not the actual, not every single user on the account. It's just this account. They're pulling us as an example. Sorry, I'm correcting myself here. So anyways, that's what the website does. And they're holding a crypto airdrop. Okay, but this did not go well. So the airdrop now goes planned after one bot ran away with 58 ETH or $180,000 for draining it from one user. So according to some people, there was not enough liquidity on Uniswap, which is why bots can easily control the token's price. So what really happened during the WTF token launch? So basically, the airdrop took place yesterday on January 13th. So one user lost more than $135,000 per Ether. This person was reportedly buying WTF or fees WTF tokens, all right, just in time it happened on the Ethereum blockchain. At the time of the accident, basically, somebody accidentally swapped Ether and WTF tokens and unintentionally swapped 42 ETH in exchange for 0.000004 WTF, okay? So this is something you have to understand whenever you're going to buy. It's like whenever you're participating like this. So whenever new tokens launch on the blockchain, there's two problems. Like if you get an airdrop, right? Like you might go over to CoinGecko and see like, oh, what's my airdrop worth? Okay, and you might like go find the cryptocurrency price, maybe use CoinMarketCap. CoinGecko usually picks them up faster. But like, let's just say you got the Uni token, all right? Let's just pull up an example here. See if I can find the Uni token. Okay, and then like, you find, oh man, my Uni token is worth like $30 a token or something. I'm not sure what it is. Like, let's go back to the beginning. So like, here's when the airdrop happened. You find, oh man, my token is pumped to $7 a token, and you're sitting there doing the math on how much that's worth. You're like, I want to get out of my Uni token. Well, you may not be able to actually swap it for the amount of crypto you need because of liquidity. So it depends on the token, right? Some tokens do have a lot of liquidity, but basically whenever a new token launches, like some people don't understand this, like where does a cryptocurrency's price come from? It doesn't come from like, it's not programmed into the blockchain somewhere. It's not like coded into the smart contract. Basically the market determines the cryptocurrency price. And what is the market? Well, the market is an exchange, and really the total market is all the exchanges and their average price together. Because, if a token starts trading more on this exchange, then people see that it's cheaper on this exchange and they'll come in and buy it, and then the prices will typically find some sort of equilibrium. It's called bringing markets to efficiency. But you have to start somewhere, okay? And this is how a lot of token launches happen that are decentralized. This is why DEXs have exploded like crazy, or decentralized exchanges and airdrops explode like crazy. You can launch a new cryptocurrency really fast and then get it trading on exchange completely permissionlessly. Like you used to have to create a blockchain, right? And then convince a cryptocurrency exchange to list you, most times probably paying exorbitant fees, right? Highway robbery to get listed on those exchanges, hoping that other people will buy your cryptocurrency and have a place for it to trade. And you got to do this across multiple exchanges, okay? But now, basically, you just launch a token with an airdrop, and then all you have to do is put it on one decentralized exchange to now create a market and a demand for this, okay? Now, what happens when people do that? All they do is at least one user needs to go take some of the tokens they just got and another token, typically WETH, and then just stick it into a liquidity pool, equal weight, and then that becomes the initial price. And what people will do is they'll look at the tokenomics and say, okay, there's this many tokens, and this is what the project does. We think that market cap's too big or too small, and therefore the price is, they're either right or wrong, and they'll start buying or selling the tokens based on that information. And that's why you see this wildly... Sorry, I was not sharing my screen here. You'll see this wildly speculative, price curve a lot of times initially because the market's trying to figure out, hey, what's this thing worth, right? We don't really know. And the other factor in this is the liquidity is really low. Like on the first trade, like only one person has gone up and then put tokens into the pool, unless, a team has come along and done it. Now, if a team does it, they can come on and pull the funds out, right? That's another risk. But you have to understand this, like just because a token says it's worth $7.10, I mean, this is pretty high volume on Uniswap. Uniswap's not the best example, but Just because a new token says it's worth like $7, $100, whatever it is, and then you have like $1 million of this token, that doesn't mean that you can just sell all $1 million. You need the liquidity depth to actually do that with the proper amount of slippage. And on new coins, like, you don't always have that. Okay, so that's problem number one. The other problem is whenever you have a really low liquidity, the price is very easy to manipulate. Very, very easy to manipulate because you can just buy and sell, with large amounts of money relative to the liquidity and make the price jump around like crazy. Okay, so that's what's happening here. Is basically, this person was not. I mean, they might have been an airdrop recipient, but this was not like the dangers of they went and got an airdrop and then they swapped it and then all their money's gone. From just reading this article at face value without having done a ton of due diligence in this scenario, just taking this at face value, it looks like this person went to go buy some of this newly minted token on the exchange and they tried to buy 42 ETH worth, and there was not 42 ETH worth in there, and 0.00004 WTF came back. So yeah, that's basically what happened. So let's continue on with this. During the airdrop, with the crypto investors who felt skeptical about the fees, WTF developers. So again, I don't know everything about this project, right? I don't keep track of everything in the space. I'm not trying to necessarily throw shade at any teams or anything like that. I don't have enough information. Like I said, I haven't done a ton of due diligence on this particular scenario. Just seeing this initial thing come out. So I'm just going to take what's here in the article at face value. If you know differently, you think differently, comment in the comment section below. Basically, it turned out the low liquidity in the trading pool was the one to blame for the issue, according to Cointelegraph. Let's see here. So this is also what's being reported in the article, that this is the issue. This is the reason that that this is the reason why it happened. Okay, so like I said, I've not done a ton of due diligence on this scenario to know whether this was like a rug pull or whether this is the real reason why the money was lost, or whether there was something else going on here. If you know differently, you think differently, I'll let you all duke that out in the comment section below. So the Fees WTF team sent tokens to the user's wallet address for the promotion, digital currency, hence the airdrop. So that's what the airdrop is. Eligible users could receive, NFT token during the launch. You can also stake WTF tokens to have a 7,000% return at the moment. Welcome to yield farming. As soon as the WTF listing was concluded in Uniswap, investors were quick to pounce the opportunity, collect returns from the airdrop. However, low initial liquidity and ETH-based exchange doomed the users to false hope. Okay, so there's more people talking about the WTF Ponzi scheme. Let's say we got a. Okay, let me just see. Okay, so we have another tweet thread here with some more information on this. I'm actually going to read this. Okay, so basically they did the airdrop what exactly was expected. So again, this is their opinion. I'm not just like getting behind this. I'm just reading his face value. It's a poorly executed Ponzi to take your precious ETH away from you. Let's have a closer look. Okay, I'm not also refuting their analysis. I'm just saying I haven't done a due diligence in this project to make up my mind on what actually happened. So they went and put a nice UI over an interior of the user's Ethereum transactions, summing up gas used. That's the product. They got more than 150 ETH in donations for this. That's not enough, so they made up a Ponzi token up. This is the WTF token. Free money while you wine, they say. It's not free. You have to do 2 transactions to get it. Unlock the token, pay the claim fee, then claim the NFT. So, okay, so still free money. Is there a token? Stop complaining. So bear with me. This is the unlock function. It sends 0.01 ETH to the WTF team. The brilliant thing here is if you use the referral, you actually send part to the referrer. So it's a Ponzi is what he's saying. And then you still have to send another transaction to claim tokens with the NFT. With current gas prices, okay, you just burned a lot of gas for nothing. Each time you transfer a token, you're paying a % fee to the WTF team. Okay, so basically, anytime tokens move, there's a lot more under the hood than just the swap that happened that caused people to lose some money. Transfer fee. So it basically made an, yeah. Okay, so I'll put a link to this tweet thread down in the description below if you want to read more about this. Okay, so we got some of the questions in here. Okay, so let's go ahead and let's go ahead and look into the crypto markets. Okay, kind of check on crypto prices here, see how everything's doing. I actually want to check to see how the stock market's doing too. Okay, so I would call crypto mostly flat over the past couple days. I mean, maybe we're starting to, get a little bit bearish from the recovery that we've seen, right? We don't know if it's going to be a bounce or if it's going to be something that's more convincing. So we've been talking about this, what's the likelihood that we could see higher cryptocurrency prices in the future? I mean, on the grand scheme of things, I still have the opinion that we're trending higher over the long term, okay, without having to go into some grueling, brutal multi-year bear market, right? I don't think it's going to happen. But in the short term, nobody for sure knows what's going to happen. Where are we now? Trying to see if this movement right here is just a bounce like these other ones, all right? Or if we'll actually see some sort of convincing reversal like we kind of saw back here. Now, this is a little bit more of a V-shaped recovery once we had this, but don't forget we had this, all right? And then we down just slightly more, and then we started our recovery, okay? So I talked yesterday about the likelihood of institutional players, entering into the space and how that could be a very likely catalyst for what's coming next because institutions can buy in size in a way that retail investors like you and me cannot. And, the risk-reward scenario for crypto has changed a lot over the past couple months. We got a significant discount on Bitcoin, a significant discount on Ether. And what's the likelihood that it's going to get cut in half from here? Way less likely than it was, 90 days ago, all right, or 100 or 40 days ago, whatever it is. Let's just see here. Yeah, maybe like 80 days ago. That's when we were at November 9th. That was the Bitcoin top. Or was it? Hold on, let's see here. Yeah. So, you're at the all-time high. That's like one of the worst times. That's like one of the worst risk-reward scenarios, okay? But down here, the risk-reward scenario is getting a lot better. How many cryptos are available in 2022? It's almost impossible to count. You'd have to, it's hard to know for sure. You have to estimate. I mean, it's thousands and thousands and thousands, maybe even, I don't even want to try to guess because I'm probably going to make myself look stupid doing it. You'd have to basically, because the thing about it is, it's so easy to create a cryptocurrency on the grand scheme of things because you don't have to create it in blockchain like you used to back in the day. You can just launch a new token on top of a blockchain, whether it's a smart contract based token or whether your chain offers some different way of issuing tokens, okay, with not that much effort. And so you have to go across every single blockchain that supports tokens where there are markets that can be traded. And you would have to basically count them all. So it's really hard. So I guess the real question is how many tokens actually matter. Well, I think using a website like CoinGecko is a pretty good starting place for that. Okay. So, I mean, there's 125 pages of 100 tokens. So you do the math. That's a lot. There's a lot more cryptocurrencies than that out there. It's just how many actually matter. Somebody says you think someone with 42 ETH would have half a brain. You can show it actually. I don't know why YouTube like hid that comment. So basically, we see a lot of large transactions that don't make sense on the network. You can just go through and look at it. You can go look at, I think it's the Token Oops Twitter account. It's basically like, hold on, let me find it. This literally like looks at like failed transactions on Ethereum. I don't mean failed like you tried a transaction and then it didn't go through. I mean, it's like this. It's like, I guess they haven't posted in a while. Yeah, they stopped posting. Basically, this is like, sometimes you'll see large transactions on here. Like, one of the most common ones is basically people transferring tokens to the smart contract itself. So basically, like, a token, let's say a uni token, for example, is governed by a smart contract, and that smart contract governs the entire collection of uni tokens. So all the uni tokens belong to a single smart contract. And then basically that smart contract is responsible for moving tokens around, determining how many tokens belong to each individual person. Like that's their balance. It changes balances whenever transactions are made. You know, you can fetch the balance to see what much they have. And whenever you move tokens around, you have to call a function on that smart contract that's like, hey, transfer tokens. And, you know, you tell it who you're transferring to. You give it an address. And one of the most common mistakes for beginners is to take the token smart contract address and stick it into that function as the recipient of the transfer. And that means basically people end up, you know, sending tokens to the contract itself by mistake. So you see that problem a lot. So if you're watching this channel, you didn't know that's possible, don't do that. You know, always make sure the recipient address is the person you're trying to send tokens to. Double check, triple check, always double, triple, quadruple check the recipient address and the amount that you're sending. We see some tokens actually implement recovery mechanisms into this whenever it happens that, you know, either the funds can be recovered or basically they have some sort of business logic inside the transfer function that does not allow the token address to be the recipient of the transaction. There's always like trade-offs. There's always debates on whether people should put that into newly launched tokens because you're increasing gas costs whenever that happens, but you also have this fail-safe mechanism that prevents it from ever happening. So just something to think about. Let's see here. Suppose this Doge just shot up 20 cents. Is that because Tesla is accepting it officially now? I don't keep track of the Doge price. Let's look. I don't think Doge shot up. Oh, to 20 cents, not by 20 cents. Looks like Doge has been on a tear for the past 24 hours. I don't keep up with Dogecoin. I don't know what's going on. I don't know if anybody's checked on the Dogecoin millionaire. I hope he's doing okay. We're a long way from the top on Doge. It's like a 3x. It could come back. It's just looking kind of rough right now. Someone says Tesla is accepting Doge. Yeah, I think I see people accepting Doge. I don't know if that's the reason that, like, I mean, I don't know how many people are going to commandeer a bag of Doge just to buy a Tesla. But it's cool. It's cool for the community. I mean, I'm not knocking it. I'm just trying to quantify the impact. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so that more people can learn about blockchain. And if you're as fast with the technology as I am, you want to get your hands dirty, how can you get started today? Well, you can go to my YouTube homepage. You can find my free courses there. I like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, just cut through everything. I can show you how to master blockchain step by step, start to finish, over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks for watching.